Hi, this is Stephanie Johnston with the Johnston team of Service First Mortgage, and I wanted to share some information with you guys today about interest rates, overall how they work, and also a little bit about what's going on in the marketplace currently. So today is January 25th, just to give y'all reference if you're watching this later on, 2018. So this will be, again, some great information on rates overall in general, and then what's happening kind of right now in terms of the marketplace. So what you see here is what we call our mortgage-backed securities. So we aren't going to teach you how to read this and what's going on and all the crazy land back here, but this gives you an overall basis of a little bit about rate trends. So that's why I do like to use this. So as far as interest rates, everyone's interest rate is different. So it is not a one-size-fits-all process. So that's where if you say, well, I saw rates online at X, well, that's a best case rate based on usually a very large down payment, some factors that may or may not be your situation. It might be and it might not. So what we like to look at again for that reason is the trends and what's going on. Because if you have your start rate of X and another client's start rate at Y, both of your rates are going to move in the same manner, meaning if rates are up, your rate's up, so is theirs. Rates are down, both of your rates are down. And so that kind of gives you an overall basis of the market. So a Fannie Mae, a mortgage-backed securities, this is kind of our chart that shows what's going on the rates. And this is over a wider period, usually a more extended period. I wanted to first start here and then we'll zoom into what's going on currently. So the higher that this rate is, the higher this chart is, the lower interest rates are. So it's reverse. The lower the number is on here, the higher the interest rates are. So first off, to just kind of know that that's the case. So when we watch this, most rates are going to be based on prediction. So just like the stock market, the bond market and mortgage-backed securities moves on a daily basis with what's happening in the world, trading, a lot of things in the back end. So if you just think of it, it's kind of like the stock market. However, the bond market or mortgage-backed securities is usually opposite. So when the stock market is doing great, mortgage rates are generally going to go up. If the stock market does poorly, rates are going to go down. So it's that I want both to be great and awesome. We probably want to be somewhere balanced in the middle because we want our 401ks to do great. You want interest rates to go up to a healthy environment so you can start earning money on your checking and savings accounts and your investments. So rates going up is not a bad thing for overall economy health and other factors besides your mortgage. So do remember that, and always do remember rates are great. They're historical lows. So when we do see a shift in the market that we just have a kind of a new norm, doesn't mean that they're high. It just means that it's a new normal from what it was maybe a couple of months ago. So if we start with looking at this chart, the first thing that's going to stand out is what happened from here, November 8th down to, November 15th. You said, wait, that's a huge increase in rates. What's going on here? That's going to be the day after the election or during the election time period. And I don't bring that up to be political. I bring that up to say that rates are based on predictions in some sorts. So if something happens that's not predicted, that can make a big fluctuation in rates. So this is not common to happen. Probably the only time in my 11 years that I've seen this happen so quickly would be one date in 2013 and then the day after the election where we saw such large increases just very short period. That steep down probably represents about 0.5 to 0.75% change in rate. So yes, the new norm, very, very quickly that happened. So if we looked at the overall, what's been happening since the last year, 2 years, what's kind of going on here, the main thing that you also see is a lot of peaks and valleys. So rates go up, go down, go back and forth. And then what our job is for you is to catch them on the best day for the period in which you have. So on a purchase loan, it's not like a refinance where you can say, well, I want to lock my rate here. Well, you have to get a purchase contract to be able to lock in your rate. So you might only have a 30-day window in which to lock in your rate. So we want to time it best within that. And that is something that we in the back end are looking at, give you some advice and tell you if there's anything that's a reason to lock or to wait. So again, you can lock in when you get a contract all the way up until your closing date anywhere during that period. So the other thing to kind of consider is, like I said, economic news moves rates. So for example, federal funds rate, if that's going to increase in the future, just because that event happens does not mean rates go up on that day. You probably will have something in the sense of, a couple of when we know it's going to happen, rates go up then versus again on the day. So that's some items, like I said, the stock market, jobs reports, all kind of everything going on is going to indicate. So the interesting thing, if we look at, let's say from January 4th here to today, so January, what are we on, 25th, I should know that. We've had a pretty steep increase if you look at the overall what's kind of going on here. The interesting thing is there's really not been too many reasons that this has happened. So if we go back on some of the other items, there's reasons why it went up. There hasn't been any, huge economic news. There hasn't been anything that's come out that says rates need to go up. There hasn't been a federal funds rate increase. We have really just seen an increase with what the market is going to do, what the market is going to do. So last year, the government went in and said, we're going to raise the federal funds rate 4 times. So that equates to a % increase. But we started and ended in rates about the same. You say, well, that doesn't make much sense, does it? Well, that goes to show that not everything that we want the market to do, it's going to do. And you sometimes, again, naturally is going to happen what's going to happen. So I do think my personal opinion is some of this is just catching up to where the market should be. And we have been blessed this hasn't happened yet. So that's part of it. And then the rumor or the verdict is still out now. See, since we've gone down so much, will we level out? Will we continue down this path, or will we rebound? That's the thing that we're watching and trying to give best advice, again, for depending on when you are closing. So again, rates are not awful. They are great. They're still historically, but we want to just let you know that they are different now than, say, a month ago. So important takeaways: if you're out searching for a home, you want to stay in close contact with us and let us know when you're going to be making an offer on a property. We will also follow up with you just to update your numbers and to show that, what the new payments are. Make sure you're comfortable with that. If you're a real estate agent and you have clients looking, also the same. If they haven't talked to a lender in a while, they need to do so to make sure that they like the new numbers. As well as if you're accepting a contract on a property, what is going on with making sure that the contract has an accurate, up-to-date interest rate on it for the maximum not to exceed. So again, just wanted to make sure that y'all had this information, and we'll keep you updated and keep going from there, but wanted to, again, share this info. And it's, again, not all bad news. It's just the new norm, and we're going to get used to it and know that keep you informed of what's going on so you can best plan for your new home purchase. Again, Stephanie Johnston with the Johnston team of Service First Mortgage. Have a great day.